Hello, America. Hello, Michigan. This is Annette Compo of Real Estate 411. I'm here in studio here in our beautiful studio in Detroit, Michigan, WJR, with my wife, Annette Compo.
Hello.
And we have Beth Shensky of EA Shensky here in studio with us. Hi, Beth.
Hi, Paul.
Hello. Our industry expert for the tax accounting industry. And boy, you've been doing it a long time.
Couple of years.
Front page of the newspaper is the Mighty Dollar Mite. Record sales of high-end homes in our region have been increasing. Now, obviously, we know that this week they have rolled out the auto industry for the auto show, and that will be running through the next week. So we've got a lot of traffic in the downtown Detroit area. So if you just tuning in now and you've never heard of our show before, this is the number to call with any of your real estate questions, as well as if you're down in Detroit and you have some questions about what's going on. There's a lot of homes down there, a lot of activity that have been rehabbed, and we've got upscale loft living down there. We've got historical homes that have been taken back to the era of their when they were new construction, and so of course we've got even new construction, contemporary homes, high efficiency. So any aspect of the real estate housing market that's been going down has been happening in the Detroit area. So welcome to our area, and obviously reach out to us.
And the number is 877-ANNETTE, 877-266-3883.
Now, Paul, the interest rate went down this week.
Yes, it did.
Very exciting news. The 30-year was average about 4.41 last week, which is actually dropping from 4.51. The 15-year was averaging 3.45, and once again dropped from 3.56 from last year. Now, looking at these hybrid adjustable rate mortgages, obviously we always get kind of excited because they trend down towards that 3 number, which everyone gets really hyper about because 3 is very low. So the hybrid adjustable rate mortgage averaged closed out at 3.10, and looking at the 1 year adjustable under 3 at 2.56. So great interest rates. If you're thinking about refinancing, obviously it comes under the whole umbrella of real estate that we educate you on all of your options in regards to refinancing, buying homes, selling homes, the constructional aspect, the insurance aspect, the tax aspect. We literally are that one-stop shop for you to be able to not only do business, but more importantly, become educated on your largest investment so you're making better choices.
Yes.
So
choices are the most important thing in regards to your most important investment, and that's your housing, your home, the place where you hang your hat every night, if you wear a hat, that is, and the castle that we like to call it. Real estate is hot all the time.
It is. And if
when
you're
we started our show, remember the hot topic was, are you sure you can talk about real estate? It's such a bad time to talk about real estate. Well, real estate is something we always talk about because it has to do with protection and shelter. And that's what we're all about here. That's what we stand for.
What I'm standing on right now is these numbers of what have been closed.
Get to them. Let's go.
In the higher price range. There are actually 210 new and existing residents that have sold above $1 million in Oakland, Wayne, and Macomb counties. And what's amazing about that is that that's a 42% increase from 2012.
210 what?
210 transactions. So 210 homes sold above $1 million. In 2013, which is 42% increase from the numbers of 2012. Now, when you're looking at $1 million or above, you're looking at a very small pool of buyers. And, from the market, not only value-wise of what we've come out of, also taking a look at, who's able to finance homes like that. A lot of times that market tends to be very restrictive when we think that there's a bad economy or, the unemployment rate, the economics, the consumer confidence, all of those variables that market tends to restrict a lot faster than what we would consider the median market or the lower end market.
So how do we work through these factions of the market and maneuver through them correctly and get people to the right destination?
Well, it's a good sign. It's a good sign because that is the market that the consumer confidence, when it begins to move, it takes so long to move it. And so when it actually begins to move in the positive direction, that truly is an indication that the market's changing and it's more solid, in regards to, we've been hearing, is there a second bubble? Is there, are we going to see another roller coaster ride down before we see really an option of going up? I mean, there's so many economists out there and everybody has their own opinion, obviously. And my opinion always has been is looking at over the overall market, where's the economy going and are we heading in the right direction? Now, obviously, we know that the government's been kind of the spectacle of attraction for all of us on the media, between them struggling to be able to fund the operations and kind of keep the doors open for business. It's kind of created this, this strange environment, not really for sure that we can really predict what's going to happen. And so I kind of go back to what I consider the steady Eddie economics, which means consumer confidence score really is going to indicate how strong we are going to rebound from where we came from. And so when I looked up the consumer confidence, now the low of 45 was where we were at prior to, I would say, 2009, 2010, which is where I would consider all of us very low. We didn't really believe.
Right when we started our show.
Right. It was a tough year, We are now into 80s. Now, remember, when you look at the scale of consumer confidence, which we've talked about this on many shows over the course of the last 4 years, when we get to 100, that means half of the population believes that we're going in the right direction. So we're at 80 now from 45. So those are true indicators to me that we're coming out of what we would consider the worst time in real estate, and people are believing in it. Because if people believe in it, in turn they go to restaurants, they go shopping, they take their families on vacation, they start thinking about, boy, you know what? We can buy a house that's a little bit bigger. Or maybe we want to downsize because we can sell our house for more and we can still take advantage of the lower pricing on something smaller. Maybe we want to go into a condo. Or, hey, maybe we're going to have a conversation about buying a second home. Those conversations have not been very fluent in homes, and I would say in the last, 2 years.
Yet, when you're in a strong market in Michigan, for example, take a bracket of Novi, you see the restaurants full and packed all the time, every day. And
there's a waiting line on a Wednesday.
People secure in their homes and they stay there, but then you still see homes on the market and they're selling actively, quickly, and people are constantly moving and shaking and doing what they should be doing. And it's a real stable market in that aspect in regards to Novi, Michigan. And then you can just take all those little pockets of our state and analyze them like we have, and you'll have the numbers.
This is something, though, that I want to talk about, just kind of conclusion of that conversation.
Okay.
Is that, when owning a home, we've always had that confidence that when we own a home, we have value, that our home is worth more than what we owe on it, and it becomes an asset in our world. And that feeling was lost. I mean, we looked at a lot of surveys over the course of where we, what we consider the housing bubble in 2008, 9, and 10. A lot of people said that they just lost that hope. And so now we're seeing that hope come back. And the surveys are now showing that the individuals that are lacking assets in their life are people that are renting. So when you're looking at individuals that are owning homes and they're seeing their homes increase, the average median worth is about $200,000 of homeowners. An average tenant, or what we consider a renter, which now remember, those ranks have multiplied. We've risen to 6 million people now in that rental market, which obviously is the influx of short sales, because after they short saled their home to get away from that mortgage they couldn't afford because they lost their job or something happened to them, now they became a tenant. So we're now seeing those ranks have risen to 6 million from a decade ago. But now we're looking at the numbers of those renters, and they're kind of stuck in complacency. They literally are living paycheck to paycheck, and their asset value is less than $4,000. And that's what concerns me, because, and I know you can kind of chime in on this in regards to taxes, but one of the benefits of owning a home is tax season. We get to open up all of the abilities for deductions.
And the benefit of listening to Real Estate 411 is to learn all about the things you need to know and to understand about these things that involve your life. You're the listener. This is Real Estate 411 on WJR. We'll be right back. The number to dial is 877-266-3883. That's 877 Annette. And our website is realestate411now.com.